Okay, so let's talk about Russia's war economy and this incredibly persistent idea that it's just about to collapse. We've heard it for years now. Every few months, a new headline emerges. A new analysis predicts that the combination of sanctions, war spending, and isolation will finally crack the foundation. And yet, here we are. The Russian state hasn't fallen. Its military is still fighting. So what's actually happening? The mistake, from my perspective, isn't in looking at the numbers. It's in applying the wrong logic to them. We're using a peacetime market economy playbook to analyze something that has fundamentally stopped being that. It's like trying to predict the path of a hurricane using the rules for a gentle breeze. You're looking at the wind speed, sure, but you're completely missing the transformative, destructive, and self-sustaining nature of the storm itself. So today, I want to walk through a different framework. Forget collapse for a moment. Instead, let's trace the logic of a modern war economy. We're going to look at the three distinct phases Russia has moved through, figure out what tools its leadership has used, and more importantly, what tools it has left in the box. This isn't about justifying anything. It's about understanding the mechanics of resilience and the very specific kind of pain that is still to come. Because if we want to gauge what happens next, we need to stop asking, will it break? And start asking, how is it choosing to bend? Before we begin, this is an educational and analytical discussion of geopolitical and macroeconomic events. It reflects analysis and opinion based on publicly available information and is not intended as investment, legal, financial, or political advice. Let's rewind to the start of the full-scale invasion in 2022. The immediate prediction was swift, severe economic catastrophe. Sanctions of unprecedented scale were unleashed, and the initial shock was real. But then, something counterintuitive happened. After an initial contraction, Russia's GDP grew. It outperformed some major European economies in terms of raw growth figures. Unemployment vanished, hitting historic lows of around 2%. For a moment, if you just looked at the dashboard, it seemed like the economy was booming even as the country was committing to a colossal war. This is where phase one begins, the mobilization of idle resources. Think about a pre-war economy. It's rarely running at 100% capacity. There's always some slack. Unemployed workers, factories operating below their potential, capital sitting on the sidelines. A war economy, in its initial burst, is incredibly effective at mopping up that slack. The state flips a switch. It announces massive defense orders. It pours money, created by the central bank or drawn from reserves, into the industrial sector. Suddenly, idle factories have contracts. Unemployed workers have jobs welding armor plates or assembling drones. This money flows through the economy. Wages go up. Demand for consumer goods goes up, at least initially. This isn't magic, and it's not a sign of health in the traditional sense. It's the basic, brutal arithmetic of putting every available resource to work on a single state-defined priority. Reports from late 2025 note that Russia's federal expenditures had increased by roughly a quarter in 2024, injecting massive demand into the system. This was that mobilization in action. But here's the critical point, and the first major flaw in the collapse narrative. This phase feels okay for the average person, maybe even good. You've got a job. Your paycheck is bigger. The hardship of sanctions feels abstract, offset by this newfound activity. Polling from late 2024 even reflected this, with different concerns topping the list. The pain is deferred. However, phase one has a hard limit. You can only mobilize idle resources once. Once the factories are full and unemployment hits 2%, you can't get growth from that lever anymore. You've hit the capacity wall, and this is exactly where the data suggests Russia arrived in 2025. That sugar rush of wartime spending faded. Growth projections slumped from over 4% to around 1% or even lower for 2025 and 2026. The easy part was over. Now, this is the moment where a market economy in peacetime would correct. Spending would cool, investment would shift to new productive sectors. But a state committed to a protracted war doesn't have that luxury. The demand from the front lines isn't shrinking, it's expanding. So how do you keep feeding the war machine once the idle resources are gone? You enter phase two, the cannibalization of the civilian economy. This is the pivot from feeling okay to feeling the squeeze. It's the guns versus butter trade-off in practice. When there are no more spare workers, the military and its supporting industries start poaching them from civilian sectors. We're seeing the early signs of this now. There are widespread reports of severe labor shortages. with one forecast suggesting the economy will need to find an astounding 12.2 million workers by 2032. Where do they come from? They come from cafes, from IT firms, from hospitals and schools. The government doesn't just need workers, it needs materials, fuel, and capital. So it starts redirecting them. This is where those stories about domestic fuel shortages come from. Russia, a petrostate, has had to ban gasoline exports and scramble for imports because its refining capacity is strained and, critically, because Ukrainian strikes have successfully targeted this infrastructure. The fuel is being prioritized for the war effort. Similarly, machine tools, microchips, and raw materials are steered away from making consumer goods and towards making weapons. The financial mechanism for this cannibalization is taxation and inflation. With energy revenues under pressure from sanctions and lower global prices, oil and gas revenues for 2025 were projected to come in well below plan. The state needs new money, so it raises taxes. In 2026, the value-added tax, VAT, is increasing from 20% to 22%, and the tax net is being widened to ensnare more small businesses. This pulls money directly from the civilian economy into the state's war chest. At the same time, all that government spending, chasing a now limited supply of goods and workers, creates relentless inflationary pressure. To combat this, the Central Bank of Russia has had to keep interest rates punishingly high. They were at 16% as of late 2025. This is a brutal trap. High rates stifle civilian investment and mortgages, further crippling the non-war economy, but are deemed necessary to prevent prices from spiraling. It's a deliberate choice to sacrifice the future of the civilian sector to stabilize the present for the war effort. Before we dive deeper into what Phase 2 means for ordinary people and the grim toolbox of Phase 3, I want to quickly mention something that's been a genuine help in my own routine. Life gets busy, and making sure you're eating well shouldn't be a source of stress. That's why I've been trying out Mom's Meals. They deliver chef-prepared, ready-to-eat healthy and fresh meals right to your door. What I really like is the focus on specific nutrition. They have keto-friendly meals, diabetic-friendly options, low-carb, low-cholesterol, halal, vegetarian meals, and so much more. Prices start from just $7.99 per meal, which for this quality and convenience is pretty impressive. If you're interested in trying it out, I put the link in the description, and you can get 50% off your first order. It's a simple way to take one daily task off your plate. Now, back to the analysis. Phase 2 is defined by this growing tension. The state is actively draining the civilian economy to sustain the military one. And this is where public sentiment, which was insulated in Phase 1, begins to turn. We now have the data. By late 2025, independent polls showed a sharp shift. 34% of Russians named inflation, utility bills, and tax hikes as the most important developments of the year, ahead of major geopolitical events. Nearly half said 2025 was harder for the country than the year before. The reality of Phase 2 is a declining standard of living. It's not necessarily collapse, it's managed degradation. The question for the Kremlin becomes, how do you manage the public's reaction to this inevitable decline? This brings us to the political management of Phase 2, which is just as important as the economics. The state isn't just a passive actor here. It's actively engineering the distribution of pain and the narrative around it. We're seeing a classic political strategy play out, the use of scapegoats. According to analysis from the Carnegie Endowment, the Kremlin is using regional governors and appointed senators in the Federation Council as lightning rods, or bad cops. These officials are the ones publicly floating deeply unpopular ideas, like ending a popular tax break for the self-employed or introducing new fees for the unemployed. They absorb the public's anger. Then, if the federal government or Putin himself moderates or delays these measures, they get to play the good cop, appearing to save people from the worst of it. The goal is to direct frustration away from the central leadership and the core decision to continue the war, and onto local administrators and bureaucratic processes. This is a calculated move to keep the social contract intact. The old pre-war bargain of political passivity in exchange for stability and gradual improvement is gone. It's being replaced by a starker, more demanding one. You must support the war, and therefore you must pay for it. And this leads us to the threshold of Phase 3, the one that historical war economies like Nazi Germany or the Soviet Union in its final years fully embraced, but which modern Russia has so far only dabbled in: comprehensive state control. Phase 2 relies on market-adjacent tools. High interest rates, higher taxes. They distort the economy, but there's still a price mechanism. Phase 3 asks, why bother with prices at all? If inflation is driven by too much money chasing too few civilian goods, the state can simply decree the prices of essential goods. It can institute wage controls to stop the spiral of labor competition. It can formally ration fuel, food, and housing. It can mandate labor direction, telling engineers or factory workers exactly where they will work. These are the tools of a fully mobilized, total war economy. They are extraordinarily effective at suppressing inflation and directing resources with surgical precision to the war effort. But they come at the cost of utterly extinguishing economic freedom and innovation. They also require a vast, coercive bureaucracy to enforce. The big question is, will Russia's leadership feel compelled to fully deploy these tools? From my assessment, it depends entirely on their perception of the war's longevity and intensity. The current strategy seems to be a mix, using Phase 2's painful but market-based measures, combined with targeted controls like fuel export bans and the political theater of scapegoating, to keep the system moving without resorting to full-blown, Soviet-style command economics. They are trying to walk right up to the line without crossing it. But every escalation on the battlefield, every successful Ukrainian strike on a refinery or a supply line, increases the pressure to cross that line. The recent forecasts of stagnating growth through 2026 suggest the current model is hitting its limits. So let's address the big counter-argument head-on. Many will say, this sounds stable, but what about the people? Won't they eventually rebel against this declining quality of life? This is a powerful point. History shows that public tolerance has limits. However, we have to assess this likelihood through the specific context of modern Russia. The state has spent years building a system of political control, media narrative management, and repression. The bad cop strategy is explicitly designed to fracture and divert public discontent. The polls, while showing increased worry, do not yet show a revolutionary impulse. Frustration over prices is different from a political demand to end the war. An economic collapse, in the classic sense, typically requires a sudden catastrophic failure, a banking run, a currency crash, or a total credit freeze. Russia's capital controls and financial isolation have ironically made it less vulnerable to these external shocks. Its crisis is more likely to be a slow, grinding erosion, a managed stagnation as some reports now phrase it. The true vulnerability may not be a dramatic public uprising, but a gradual, internal hollowing out. As talent and resources are sucked into the military-industrial complex, what's left for everything else? The civilian economy becomes a withered shell. Innovation dies. The education and healthcare systems, already facing severe staff shortages, decay further. This creates a long-term structural weakness that could take a generation to recover from, regardless of the war's outcome. So, what does all this mean for the broader strategic picture? First, it means that hoping for a spontaneous Russian economic collapse that ends the war is a dangerous fantasy. The system is built to endure this specific kind of strain. Second, it clarifies the real battle. The Ukrainian campaign against Russian oil refineries isn't about triggering collapse. It's about raising the cost of Phase 2 and pushing Russia closer to the hard choices of Phase 3. It's about making the cannibalization of the civilian economy so painful and inefficient that it strains the system's political management to its breaking point. Conversely, the Russian strikes on Ukrainian energy infrastructure have a parallel goal: to overwhelm Ukraine's capacity to manage its own wartime economy, to make the cost of resistance unbearable for its people and its international backers. Ultimately, this analysis shifts the frame. The economic contest isn't about which economy will collapse first. It's about which system can better manage the brutal, degenerative logic of a long war, which leadership can more skillfully navigate the trade-offs between guns and butter, between public morale and military necessity. Russia has shown it can navigate phases 1 and 2. The open question for 2026 and beyond is how much further down this path it is willing or forced to go. If you found this breakdown useful, this way of thinking beyond the headlines of collapse and looking at the actual mechanics of a war economy, don't forget to subscribe, like, share, and hit the notification bell. Thanks for watching. See you in the next one.